Yeah, thank you very much, Alan, for these nice introductory words. And thanks for the invite to this really interesting seminar conference. I think it is well organized, as you will see, as Ian finished off where Armin, or started off where Armin finished. I'm starting off where Ian was finishing, and I'm going to talk about the financial reporting developments in the EU called EPSAS, European Accounting Standards, and you will see it's not by accident that it kind of sounds very similar to EPSAS. I'm going to talk about three areas, starting points for the EPSAS reforms. As a first point, objectives and possible characteristics of EPSAS. And then lastly, the project and work plan for the EPSAS reform. And let's just start with the starting points for the EPSAS reform. And colleagues, I think we have all seen that very often a crisis is needed to develop structures and behavior to the better. If you look at the 1997 East Asian financial crisis, this was the starting point for the Fiscal Transparency Code of the IMF. And very similar to that, the starting point for this initiative is the 2009 sovereign debt crisis. I think it's Greece mentioned here. It wasn't only Greece, to be honest, if you look in detail at the figures. And the problems identified actually have been twofold. The first one was there and there is still a lack of comparability of member states' public sector accounting. And it's not only between member states, it's also within member states. And probably you have seen one area in the PwC study looking 5 years forward, and that was a pale area in the middle of Europe, which was Germany. And obviously Germany is one of the examples where you have great variety and heterogeneity in public sector accounting, even within the country, comparing the states, for example, or comparing local governments. But there was a second problem identified, which is the incoherence between financial accounting on one side and statistical accounting on the other side. So if you look at the two kind of different accounting frameworks, you get different messages out of that regarding financial performance and financial position. And the question is really, is that sustainable looking forward? And obviously it is not. And the recognition of the European Commission, therefore, as kind of an assessment was, again, two results. The first result is fiscal transparency is necessary for macroeconomic stability, surveillance, and policy. And the second one is, and that is going towards the issue of heterogeneity, harmonization of public sector accounting at micro level leads to better fiscal data at macro level. And therefore, there are two issues identified. Obviously, firstly, the current public sector accounting of member states was identified as significant weakness. And the solution to that, obviously, is to harmonize this accounting on the basis of accruals, and I will go on to that in a second. But there are obviously some challenges connected with that solution. And this is the next slide, obviously, and I want to put it in a little bit of broader context, because what we see here as challenges for Europe, it's not only a challenge for Europe, it's a challenge wherever you look. And I think Armin really has alluded to some of them. First of all, different reform components which are interrelated, and Armin mentioned that. Public sector accounting reforms are not done in isolation. They are connected to other reforms, like legal reforms, like IT implementation reforms, or like even educational reforms, which are needed in order to go forwards. It's not just about setting new standards. And very often countries are lacking experience in managing such multi-dimensional, huge projects and huge reform projects. The second challenge here is different accounting maturity between or even within countries, as I have mentioned. What means first of all, you have a variety of starting points. It's not easy to say, okay, this is where we are and this is where we need to go to. So this is our kind of our reform plan. You don't have that as you have multiple starting points. That's number one. Secondly, there is obviously not necessarily a common understanding of what needs to be done. And we see that when we kind of face the discussion in the working group, in the EPSAS working group among member states, the way forward is not kind of the same for every perspective and for every member state. And thirdly, obviously, there are more advanced entities, there are more advanced member states, more advanced countries, and obviously they are reluctant for good reasons to end up with something which is less than what they already have. So kind of it's setting the bar at the level of the most advanced, and that's certainly a challenge for those which are a little bit behind. Third challenge, heterogeneity of national schemes and systems. And kind of we can talk about that, and I come back to that in a minute. We are talking about how to kind of cast different tax systems into one standard, covering it all, from kind of a revenue recognition standpoint, and Ian is facing the same challenge. Or pension schemes, kind of look at the variety of pension schemes and try to come up with one accounting treatment in one standard for Europe, covering all these different pension schemes. That's a real challenge, certainly for Europe, but also for others. Complexity of public sector specific transactions. Don't say that private sector is always easy, but we have a kind of added complexity here because of the influence of laws and regulations on execution of budgets on one side, and then we have different transactions like social benefits, which are in itself very complex, and already the assessment of what do we have and what we need to regulate in a standard is a challenge in itself. Fifth, Armin already alluded to that, is capacity building. Very often you see kind of a lack of accounting knowledge in the different countries, also in the member states, and obviously that is a challenge. And lastly, just as a sample of 6 of the challenges, is the lack of historic information. So kind of huge efforts needed already to make an assessment of what are the assets which we have and what are the liabilities. To come up with the opening balance sheet kind of sounds easy on the project plan, but is a major undertaking. So leading me to the second part of my presentation, objectives and possible characteristics of EPSAS. And that's going to be interesting, I think, for all which are very familiar with EPSAS, kind of asking the question, why do we need a separate stand of standards? Obviously, the objectives of EPSAS is, and you can read that here, to increase fiscal transparency, number one, on the basis of comparability between member states, but also within member states for all levels of administration. We are talking about federal level, state level, where you have one, local government level, and social security schemes. So all these levels are covered by the project, and of public sector accounting and financial reporting between and within member states. So this is why Eurostat underlines repeatedly that number one, accrual accounting is needed in order to achieve transparency. I think that has been the message from start on. Already 2012, 2013, the way towards accrual was quite clear. And it was a strong message to all countries which are still on cash. And number two, harmonized accounting is needed for better comparability within the public sector. A very important message was the last one in the dark blue or dark gray box. The coexistence of cash-based budgetary frameworks and accrual accounting is not questioned in itself. Is it reasonable? That's a different question, but the project, the EPSAS project, is not covering the budget for good reasons, because obviously the European Commission has no mandate to kind of do regulation in that context. So this is the house of EPSAS based on the objectives which I just mentioned. Obviously, on the first view, if you talk about the EPSAS project, you think it's all about setting standards and then it's done. But obviously there is some ground building work needed up front, and you see that here. Obviously these are the EPSAS objectives which I just mentioned. kind of adding the objectives of general purpose financial reports or general purpose financial statements, which are obviously twofold, kind of support decision making on one side and increase accountability on the other side. So that is really the fundament of the EPSAS house, if you want, kind of leading to two set of principles. And that's an interesting discussion, as you can imagine, within 28 member states, to say who is involved where. Yeah? Who is setting the standards and who has to say something and to contribute something at what point of the discussion. And this is when we talk about the governance principles, talking about principles for cooperation between a standard setting body, between a technical advisory body, between the academics, between the citizens, and the principles for setting up this architecture, in other words, to kind of set up the bodies. And the second part of principles are then the technical principles, where we talk about accounting principles. And again, I think this is where we have kind of a clash of different cultures. For instance, here very intensively we talk about what is the rule of the prudence principle in the public sector in Europe. Germany is very much focused on the prudence principle, being casted in an accounting principle as an overarching, dominating principle, leading to kind of undervaluation of assets, overvaluation of liabilities in order to be on the safe side, whereas others saying the prudence principle has no place in the public sector because obviously you're financing by taxes this undervaluing of assets and overvaluing of liabilities. So interesting discussions in these groups. The overarching objective of the whole project obviously is to serve the European public good, so acting in the public interest, which is quite clear, I think. So looking at the potential future accounting standards, how could they look like? And I want to focus obviously just on two characteristics or attributes. We have talked about accrual accounting, we have talked about double entry bookkeeping. Take that as a given. There will be no way out. Okay, for all of those of you who are still on cash. But let me focus on international harmonized financial reporting and consistency with ESA. I think that has also been made clear from start on, and actually one of my next slides will allude to that. There should be as less deviations as possible from internationally accepted standards, brackets EPSAS. In other words, there needs to be a European-specific reason why we deviate from that, number one. And number two, and this is kind of going backwards to what has been the results of the assessment regarding incoherence between financial accounting and statistical accounting. Even if we all agree that there are two different objectives of these two frameworks, I think there should be a very good reason if we come to different results in these two frameworks. In other words, what we at least need to achieve is the ability to reconcile the different messages, because we need where the differences are in financial reporting towards statistical reporting. So this is really going to the heart of the question, relationship between EPSAS and EPSAS. And you see, there is a slight evolution in the assessment of this relationship. The Commission report from 2013 on the basis of the 2012 public consultation was stating the EPSAS standards represent an indisputable reference for potential EU harmonized public sector accounts. In 2014, so two years later, PwC did a study on behalf of Eurostat regarding different aspects, and one aspect obviously was, or one result was to say EPSAS appears to be the most common source of reference for the member states, at least at central level government or central government level. And many member states believe that EPSAS should not reinvent the wheel and capitalize on the accounting standards developed on a global basis. I don't want to be silent on the fact that there are also member states saying it should not be EPSAS at all. I think we need to be aware of that, but that was obviously kind of a majority result in this study. In 2016, and this is kind of the current way of Eurostat to talk about that, And here I'm speaking under the control of Istvan, who is sitting over there from Task Force EPSAS. The current wording is EPSAS is the European interpretation of EPSAS, which within itself is nothing Europe-specific. No, that's nothing Europe-specific, because obviously, and Ian talked about that, it's the most common way to deal with EPSAS, to transform EPSAS into national regulations, into national standards, into national accounting laws. So that's nothing specific, but I think it already kind of alludes the way forward. So let's talk about the project plan for the reform. And obviously there has been a change. If you have seen the project plan 2 years before, the structure was a little bit different. What you see here is that, obviously the most interesting message or question is, where are we? Where are we now? And we are in year 1. So year 1 is 2016, so to say. And you see that the task for the first 4 years is to prepare the technical grounds. Yeah? Different to the approach before, where firstly Eurostat and the Euro Commission try to get the political commitment to this project. Now there needs to be, or the message is clear, that there needs to be more technical work, more preparational works in order to substantiate the discussion regarding necessity and benefits of this whole EPSAS project. So you see, this is what should be done and what is going to be done in the next 4 years. And you see that until or up to the end of the year in 2019, this should be casted in a legal framework, in a legal basis, as being kind of the fundament for the EPSAS implementation, which then should kind of take place over a transition period of 5 years until the year 2025 in a staged implementation, meaning that you can grow into, or member states could grow into the full application of the standards. In the meantime, and I think that's also very important, when you kind of ask the question regarding what is the relationship between EPSAS and EPSAS, Eurostat and the European Commission kind of recommends the voluntary implementation of EPSAS. And that is what many countries are already doing. I'm seeing Noel Camilleri sitting here from Malta. Malta is one of the countries which is already in the project and the process of implementing EPSAS on the basis of Maltesian public sector accounting standards. And that is actually also the work plan and the focus of the European Commission in the meantime, to further support the implementation of accrual accounting on the basis of EPSAS by member states, so motivating, encouraging member states, not only with good words, but also financially, which is certainly an important aspect. Secondly, to work on drafting the detailed proposal for an EPSAS framework on the basis of the work of the working group and the cells which have been established. I show you the cells in a second, and on the basis of so-called issues papers, which are kind of preparing the ground for theoretical discussions around some of the accounting areas. And this is, in a nutshell, the overview on the current cells. 3 cells have been established by the European Commission, containing 5 to 6 experts from member states, and containing the EPSAS board chair, and the FEE public sector group chair, which is me in that case. So you see a cell on first-time implementation. This cell has kind of finished its work with the approval of the implementation guidance, first-time implementation guidance in the working group on Tuesday and Wednesday. So this cell has done its work. The cell on principles related EPSAS standards, these are the accounting principles I talked about in the house of EPSAS, and the cell on governance principles, where I talked about how to kind of set up the bodies and how to cooperate between those bodies. So the last slide here, or probably the slide before the last slide, the scope of the consultancy project of Eurostat contracted out to EY in 2016. Two main issues. First of all, the issues papers I talked about, and I show you what issues have to be covered or had to be covered in these issues papers. And the second task, and I think that is equally important and challenging in the same time, first of all, to do an estimate of the opportunity cost of not implementing EPSAS, which is quite an interesting question. You know that PwC had the task to kind of make an assessment of the cost of EPSAS, and this is the kind of flip side of it. I hope that the kind of right results come out. Summary of the impacts of development of EPSAS. So building on the 2014 results of PwC, have there been kind of some major developments of the 6 weakest countries from an accounting perspective? And lastly, task 2C, also very challenging and very important, kind of summary of the impacts of developments of EPSAS in 2 areas. One on the capital market union, second, investment, growth and jobs, and thirdly, the impact on democratic scrutiny. And I think that's, Tim, I think that's going in your area and of expertise. That's also very, very interesting. So and that's the last slide, Alan, covering the issues papers which were contracted out by Eurostat, and you see that it's probably a list of the most challenging areas in public sector accounting you can think of if you have to list them. Things like accounting for taxes, accounting for employee benefits / pensions, accounting for social benefits, accounting for infrastructure assets, military assets, and social contributions, just as to name a few examples. So this is what we are working on currently. So let me come to a conclusion. I would say as the work on EPSAS has already started in 2011 and 2012, and it was kind of a bit silent probably for the public, the work and the discussions on these European standards have become more substantive and focused in the last 2 years. So I think we see a lot of progress here. And whatever the outcome might be, I see already 2 positive developments which can be observed. The first one is a lively exchange of views and experiences on public sector accounting standard reforms between member states, including site visits. I think if you look at the past 2 years, a lot of governments have visited each other and have kind of asked, what are you doing? What are your experiences? And that's certainly a result of the EPSAS project. And the second benefit is certainly an intensive debate between both sides, economists and accountants, and statisticians and accountants, which has not been the case over decades, resulting in misunderstandings, kind of misperception, and resulting in what we have today. So I already see the benefits of this project, and with that, let me conclude. Thank you very much.